Over the weekend, Bitcoin's price crashed aggressively, and there was a cascade of liquidations across the market. Now, a lot of people are wondering, why is Bitcoin crashing, given the global macro environment? Wasn't Bitcoin supposed to be an inflation hedge? What exactly is happening in these portfolios? But there's a key thing to remember. Yes, Bitcoin's correlation to other assets, including the S&P 500, hitting an all-time high. Right now, Bitcoin and the S&P 500, a correlation of 0.6. Now, of course, up until 2020, there was no correlation at all between Bitcoin and other assets. It was a non-correlated asset. But once the institutions started to come in and they started to adopt Bitcoin and put it in their portfolio, now all of a sudden, they treat Bitcoin as the most risky asset in their portfolio. If the global macro environment calls for risk off, well, guess what the institutions do? They sell those assets. They go back to value stocks or some sort of commodity in which they feel is less risky. Now, of course, the institutions act completely differently than the retail investors who are simply dollar cost averaging into Bitcoin. They continue to accumulate more regardless of price. But we can go all the way back to 2008 and 2009 to get a little bit of history to understand how correlations and liquidity crises play out. Here you can see the gold price chart back in 2007, 2008, and 2009. You can see that over the summer of 2008, gold went down 30%. That liquidity crisis of the 2008 global financial crisis meant that all asset correlations trended towards one. Even though many people would accept the fact that gold served as a safe haven or an inflation hedge asset, it still was not immune to the liquidity crisis that was at play. And so if you fast forward back to 2022, we're in a liquidity crisis right now. It's not nearly as severe as March of 2020, which was highly acute and happened very quickly. Instead, we've been in a liquidity crisis since the end of last year. And now we're about 8 months into this. And as the Fed continues to raise interest rates and conduct quantitative tightening, they simply are forcing investors to sell any asset that they can and raise cash. The US dollar is at a 20-year high, relatively compared to other fiat currencies. But what you as an investor need to understand is that liquidity crises, they eventually go away, and correlations will return back to something like where they were before the liquidity crisis. And so yes, Bitcoin and all other assets are going down. A global 60-40 portfolio filled with stocks and bonds is down. Normally, those would have an inverse relationship. Stocks go up, bonds go down, or vice versa. But that's not what we're seeing. In this current liquidity crisis that has lasted more than 6 months, all asset prices are going down. Bitcoin is not immune, and neither is any other asset class. So understanding how these types of assets and liquidity crises interact is really important. Bitcoin and the S&P 500 hitting an all-time high correlation. Something tells me it won't stay here over the long run, but it's still important to understand what's happening today and try to figure out how you are going to move your portfolio to be able to protect yourself and/or benefit on the other side.